You mentioned some kind of sentiment, again,
Yep.
kind of getting a sense of where market participants are thinking, how the mood has changed, and I want to kind of transition into that a little bit, if you don't mind, Joe,
No, I think it's
because I
important.
think you have a lot of things that you have at your disposal to look at. So maybe you could share some of the ways in which you get a gauge of what is the sentiment overall, and how much of that are you using as contrarian indicators? That,
Yeah.
oh, the a capitulation, people are just too bearish. And we certainly have seen that recently if you're looking at investors' intelligence. I mean, this was, I feel like, one of the quickest turns to bearishness that I've seen in a very long time. So what are you using, and how do you
Sure.
use it?
So at Charles Schwab, we actually release a report on a monthly basis. It's called the STAX, the Schwab Trading Activity Index. And you can access that. Just go to charlesschwab.com/STAX, STAX. It's free. You don't need to be a client to access it. But what it does is it gives us a behavioral sentiment indicator.
Hmm.
So we have about 35 million accounts here at Schwab. And what we do is we take a sample of those accounts and we look at the behavior and we democratize it. So an account that has $2,000 is the same as the account that has 2 million. And what we do is we look at buys versus sells, and we kind of aggregate that and say, okay, were there more buys versus sells on a monthly basis? What were the top 5 buys? What were the top 5 sells? What weeks did we see some of this activity really start to pick up? And what we found in February, and this is what's really interesting in my mind, is that there were more buys than sells, basically 2 to 1. But the dollar value of the sells exceeded buys. And what that really means and how that translates is this: the smaller accounts were dip buyers, larger accounts used rallies as an opportunity to kind of de-risk. And I know it seems like it was forever ago, but just remember, it was just a month ago that we
Yeah.
set an all-time high on February 19th.
Yeah.
And here's a little tidbit for you. My colleague Liz Ann pointed out in her most recent article that if you go back to 2020, right
Hmm.
before COVID, February 19th was the high of the market at that year. So I don't know,
Yeah.
we'll see. But what's interesting is that, like I said, you saw some of the smaller accounts really try to buy the dip on that pullback, where the larger accounts were really starting to liquidate. And 9 of the 11 sectors that we follow actually saw a decrease in terms of the dollar amount being allocated towards those sectors. The only 2 that actually saw inflows were financials and materials. And now, if you're looking at kind of what sector flows are showing, and one of the ways that I look at that, Justin, is through like a breadth indicators, right? So percentages of stocks above the 50-day moving average. You
Right.
can look at that on the S&P 500. You can look at that on basically any index, but you can also, interestingly enough, kind of see that at the sector level as well too. And what I find interesting is the sectors that are kind of leading the way right now. They're not exactly the soldiers that you want or the generals that you want leading the army. You're looking at utilities, real estate, staples. I mean, these aren't sectors that you consider your high growth sectors. And you know what none of those have in common? None of them have the Mag 7, because the Mag 7, they're tied up in discretionaries, they're tied up in communication services, and they're tied up in technology. And those 3 are some of the sectors that have the lowest market breadth, just
Right.
because of what you've seen, some of the technical damage that's been done.
Mhm. And it's also worth mentioning that, as opposed to the ones that you just mentioned, XLK, XLC, the tech and communication services,
Mm-hmm.
XLY, the consumer discretionary, they're not only is that where you find the Mag 7, but that's where the Mag 7 dominates. You usually
Absolutely.
have 40% of the ETF is in 2 Mag 7 stocks,
Yeah.
in all of those cases. So certainly something to just be aware of. But yeah, as you mentioned, one of the things on, utilities, for instance, as you said, not necessarily the general you want leading, but this relative strength line, this is just XLU versus the S&P 500.
Yep.
When it's going up, it means it's outperforming, and it doesn't need to go up in price. It just needs to do better than the S&P 500,
That's right.
and that's what we've
That's
been
right.
seeing lately
That's a good point.
there. But I guess the other part here is with all this kind of defensiveness, what a lot of people kind of wonder about is, and we see this sometimes. We were seeing it on
Mm-hmm.
a daily basis to a degree. It was like, oh, the market's doing well, and uh, the money kind of comes out of the utilities and the defensive areas, the
Yeah.
XLPs, the staples, and then it kind of you have a bad day in the market and it rushes back there. So it was a really kind of, um, you know, just going back to the Nasdaq, for instance, you had a lot of these very strong days followed by very weak days. It was kind of like very difficult to make sense, head or tails. And granted, it's been a market where news has been driving, a lot of this, tariff, for instance. But when it's kind of that, a lot of price discovery, I guess, a
Hmm.
lot of uncertainty, one day up, one day down. Uh, does that kind of change your strategy at all? Do you just, I mean, for me, a lot of times I'm just like, okay, I'm going to back away and stay in cash until I can
Yeah.
figure out what's happening. But what's kind of your take?
So it's really hard right now to kind of guess where the market's heading, and here's the reason why. We have, I'm sure you've seen these things like called sector quilts, right? Where you go to like an asset manager and they'll show you, okay, well, here is the year where bonds outperformed, or here's a year where commodities outperformed, and they have the different colored boxes, and we call them quilts, whatever. Well, we run the same thing on a weekly basis for the sectors, and what we've seen, I mean, and this is wild, Justin. Like basically since the beginning of the year, the the sector that's outperformed has been healthcare on
Mm.
a weekly basis, but it's never been number one. The highest it's been is number three or number four on a weekly basis, but it's the number one overall performer in terms of on an annual, or in terms of the first 3 months here, which is really interesting because you've seen technology be number one week, you've seen financials be number one another week, you've seen utilities be number one another week, but there's been so much volatility in terms
Yeah.
of that performance that it's really hard to pick a sector with a lot of certainty right now. What I would suggest is this, and here's how I would look at the market. I think one of the reasons that you're seeing maybe some of the outperformance in utilities, real estate, and staples right now is because you've seen interest rates pull back. We were at
Mhm.
4.8%. Now we're back down to sub 4.2 or 4.2, I guess. And we're looking at the utilities basically are interest rate sensitive. Real estate's interest rate sensitive, and in terms of the staples, right? Those tend to be high dividend paying stocks. So dividends tend to perform tend to outperform when interest rates are coming down, is because there's not as much competition for for the dividend yields at that point. So I think that's part of it. I think also, as you mentioned, there's a defensive lean as well to it, as we're trying to kind of figure out, what trade policy will mean for industrials, and because they've taken it on the chin, discretionaries they've taken it on the chin, So I think the market's really just trying to figure out kind of what's gonna outperform going forward. When it comes to that, it's hard enough just to kind of think of it from a fundamental standpoint. But at that point, sometimes it's helpful just kind of going to the charts and
Yeah.
seeing, as you mentioned, the relative strength, I think, is a great way to look at that. And if you're starting to see that, okay, well, what are maybe some of the stocks that are outperforming within some of those sectors? It doesn't mean that those are the ones that you own by themselves, but maybe you start allocating a little bit more towards some of those outperforming sectors.